Welcome back, guys, to another episode of Mitchell Group Media. So you're finally ready to buy a home. The process, regardless of what state you may be in, is going to be about the same, but the specifics that I'm going to guide you on are based here in Florida because that's where my license is. Let's recap everything that needs to be in place by this point. But first, like and subscribe so you can always circle back to this video if you need to. What does being ready mean? This means your credit is in order, your finances are in order, you have at least 2 years of tax returns, which isn't always a requirement, but it helps. Your debt to income and total obligations are within acceptable limits. You're familiar with mortgages and what type of mortgage may work best for you and why. You're aware of what to expect in closing costs. You know the general location and type of property or properties to fulfill your needs. And you're prepared to work with a realtor for professional representation through a buyer brokerage agreement. This doesn't necessarily have to cost you, and you may forego any properties not cooperating with the buyer broker's compensation if you choose to, but it could be an upwards of 3% of the value of the property if the seller is unwilling to pay the commission on their sale, which is negotiable. That's why it's important to work with a professional. Now, if any of this is new to you, please check out my other videos explaining the process to get here more clearly, especially the one on how to find the right type of home, along with mortgages and the type of home that's best for you right now. At this point, you should have a moving plan in place and enough time, if you're bound by a lease, to find and close on a property. How much time does this take? It depends on availability, the market, and many times how prepared you are with knowing exactly what's available and what you want. This process could take anywhere from 1 month to a year from start to finish. But I would say at this point, you should be within 120 days of knowing that you're ready to close on a property. By this point, all of this should sound familiar to you, and you've been using all the real estate apps at your disposal and maybe even have several properties in mind. Do not get emotionally attached to a property. Do not have emotional involvement in something you do not own that will cause you to make emotional decisions. Be willing to walk away if the property does not fit all of your needs, including price. It took us almost a year to purchase a property from the beginning, and we lost out on several properties we made offers on, and 2 that sold before we were even able to make an offer on, before we could find the one we closed on, and thankfully we did, because we would not have been as happy with any of the other properties. So now you've done a great deal of due diligence and planning. Sacrifices and commitments have been made, and you're certain you're ready to move forward. It doesn't make any sense for people to reach out to a broker prior to this because there are time-sensitive factors associated on either side with being ready. Brokerages may have affiliated businesses such as mortgage services, property inspection, title companies, real estate attorneys, and sometimes even moving companies. I recommend shopping around and finding the best fit for you, but all things being equal, I encourage you to utilize the services from businesses that your brokerage already does business with. This can make the process and communication much more transparent and streamlined. Once you reach out to an industry professional, the first step will be a buyer brokerage agreement. They will put you in contact with a mortgage loan originator for pre-approval, and they will request the necessary documentation. They will verify your credit score and history. You'll usually need 2 years of tax return. You'll verify your debt to income ratio and your total obligations ratio. The mortgage loan originator will tell you everything they need to walk you through the process of pre-approval. At that point, they will give you a value estimate amount of what you can purchase, and shortly after that, you'll receive a DU or desktop underwriter or some sort of conditional approval. This conditional approval will have an expiration date, usually 30 to 60 days, but sometimes 90. During this time, you can apply and shop around with other mortgage companies without affecting your credit score and try and get the best rate. That's why it's important to be ready at this point. Then you will need to verify proof of funds for all of your required down payments and closing costs. And with those 2 pieces of information, you'll be able to start looking at properties that you qualify for. Now is also the time to choose who or what entity will be holding your down payment or escrow, whether it is a real estate attorney or title company. Your realtor will carry you through the whole process. Once you narrow down the properties to one that you actually want, you will make an offer. If the offer isn't accepted, you either negotiate terms until it becomes agreeable or move on to another property. Once an offer is accepted, then you're officially under contract. Congratulations, the first major hurdle has been cleared. There are a wide range of contracts that are available, from proprietary contracts from each brokerage to general state accepted contracts. Here in the state of Florida, we generally use the FAR as-is contract, but it's not the only option that we have available. Whatever contract your brokerage's agent uses, they will go over with you. It's important to understand and be comfortable with what you're signing and understand the time frames that are associated with an effective contract and what needs to happen at certain intervals in order to close the property and not be in breach of contract. These conditions and time frames are all negotiable. In fact, almost everything is negotiable, which is just another reason why it's in your best interest to consult with an industry professional. This is also as good a time as any to mention seller concessions. Seller concessions are payments made by a seller to offset certain costs or fees generally associated with buying a home. Generally, the seller agrees to pay a certain amount, sometimes by raising the cost of the home. These concessions can make homeownership more accessible for buyers by reducing upfront expenses, Concessions are negotiated as part of the purchase agreement, and the amount is expressed as a percentage of the home purchase price or a fixed dollar amount. Seller concessions can have pros and cons for both the buyer and the seller. Pros for the buyer may include a more affordable loan and the ability to make a higher offer. Cons include the offer being rejected and being trapped into a more expensive loan. Pros for the seller include completing the sale quickly and attracting buyers in a crowded market. So it's important to know what kind of market your subject property is in. There are limits to seller concessions for obvious reasons. Mortgage rulemakers like Fannie Mae and the Department of Housing and Urban Development, or HUD, set limits on seller concessions as a means to hedge against inflation in the housing market. Without limits, the seller can jack up the price of a home and offer the difference between the appraised value and asking price in the form of seller concessions for closing costs, which are usually rolled into a buyer's mortgage loan. Some common loan limits are 2 to 9% for conventional loans, depending on the down payment and purpose of the property. FHA and USDA loans allow up to 6% of the loan amount, while VA loans allow up to 4% of the purchase price. But these percentages will change sometimes in the market. Sometimes it makes for a more attractive offer, just offering less money up front, and there's also less of a chance of being able to pull out of a contract. Remember, the terms over price can oftentimes make or break a contract. Once you enter into a contract, your first deadline is likely to be your escrow. Check out my other video on understanding what escrow is, and it's basically your earnest money or down payment. This is usually followed by the timeframes associated with any counteroffers. Next will be the agreed upon closing date, followed by your financing. Then comes title evidence and insurance, as you will also need insurance on the property, usually a couple of weeks before you close. It's important to point out in the state of Florida that you may be required to have flood insurance regardless of what zone you're in addition to a homeowner's policy. It's a good idea to start shopping for those options early so you'll understand the cost that will be associated with this type of revolving debt. It may also help to understand what the current tax rate will be on your new property before and after homestead exemption. Next will come your property inspection time frame. That's usually about a couple of weeks, and somewhere around this time the appraisal should be coming back as well. If the appraisal is satisfactory to the contract price, everything proceeds as normal. If the appraisal comes up short, you have a few options. Cancel the contract and hope the homeowner comes down to the appraised price so you can proceed, but you run the risk of losing the property if they have a backup offer that may be non-contingent on an appraisal, or an all-cash offer, which could mean the buyer could be more likely to pay the difference out of pocket. Another option is if there's enough spread between the original down payment and the appraised value. You may choose to pay the additional cost out of pocket and finance more of the property's appraised value, but you will have to pay mortgage insurance if you were originally at 20% down, and now this extra amount will eat into that percentage, but not take enough away that you can't qualify for a mortgage on the property. Paying mortgage insurance at 17% isn't going to be the same amount as paying mortgage insurance at 5 or 7%. Your third option is to pay the difference out of pocket and keep the loan to value where it was to start with. Based on your specific circumstances, your licensed real estate professional will advise you on your options. Now, once your inspection report comes back, it will consist of 3 things: the inspection of the property, the wind mitigation, and the 4-points inspection. You will have to have the 4-points inspection and the wind mitigation for any insurance company in order to get insurance on the property. The property inspection report is for you to see what deficiencies the properties may have and use that as a negotiating tool to either have items fixed or get credits on the items or address them on your own after closing. Once again, this is negotiable. If your terms regarding the inspection report is not to your satisfaction, you have the right to pull out of the contract altogether. However, the cost incurred for the inspection you will not get back, and the cost here is on average around $400. Once you've passed the hurdles of inspection, appraisal, estoppel if applicable, and insurance, there may or may not be a homeowners association involved. If there is, there may or may not be a required approval by such association, but you will be well aware of that and any prices associated with the HOA long before it's relevant. Once your final hurdles have been overcome, sometime after that, you'll receive a final approval and clear to close from your mortgage company. And once that takes place, congratulations. You close and receive keys and are now officially a homeowner. After the purchase of your home, you will need to start the process of filing for homestead exemption. Homestead exemption is a property tax break that is offered based on your home's assessed value and provides exemptions within a certain value limit. Be sure and check out my video on property taxes for more comprehensive details on this and other important tax information you will need to become aware of as a homeowner. If after this you feel like you're ready to buy a home in Florida, feel free to reach out. My contact information is linked in my channel, and if you're not located in my market, I can refer you to a local professional that I would trust to do business with in your market. If you have found any of this helpful or informative, please like and subscribe, and I'll see you in the next video.